Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on the new stocks? This is where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket. By any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this is where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey, you talking to the Prophet?
There we go. I think everything should be working fine. No audio yet. Good countdown. Well, hey, we got a countdown. Let's see. Woo! Place a little early music. 29 LHO6, Tom 74, Richese, not sure. Baykeeper, Gordon Bennett, Joe Pirate, and then over here we have Scott. Hoop and Tony, Digital Asset Jared in the house, Ryan, Biotech Breakout, P. Kelly, Sylvia, Darting Uphill, Steve. I think. Yeah. Okay. So we're going to do a cool thing today. Obviously, I get that a lot. Good to see you. What's up, David? So we're going to talk about, maybe I should bring that down a notch. We're going to talk about, obviously, our cognitive bias. We're going to continue with that. But another thing, Michael, what's up? Tube That Pipeline, what up? Michael Murphy, across the pond. We're also going to talk about the interest that they're paying and the difference between daily compounded interest and monthly and all that kind of stuff. And I'm going to actually just grab a little calculator and we're going to go through what the difference would be between keeping if you're keeping your ADA, your Cardano on Kraken versus Nexo. What daily interest versus, right, getting paid between 6 and 8% daily interest versus getting paid 5% or whatever. And we'll use the same 5%. So we'll just say 5% is the number, even though it's a little bit more than that over at Nexo. So for those of you that don't know, yes, you can keep your, here in a few days, you can already buy Cardano right now and you get 0.5% cash back, 50 basis points. And then you start collecting interest. But if you want to, in a few days, you'll be able to do deposits to Nexo with Cardano, which is kind of cool. But you have platform risk, and that you don't have platform risk if you have it on your private wallet. So you got to decide whether a percent, 1, 2, 3, makes a difference when these tokens go up 4 or 5% a day. So you still probably want to go with the least amount of risk. But if you're going to be on a platform, Nexo or Kraken, and it's going to be one or the other, there you go. If I had a choice, I would obviously keep my Cardano on Daedalus for 100 trillion reasons, but maybe you don't have a choice. All right, so we'll talk about that, and we'll get into prices, and we'll do all that stuff. And we have an article about Coinbase getting into the daily interest market. So they're starting with stable coins. They're going to start paying high yield, which is 4% or better. That's kind of cool. Ethereum options on Ledger X. Yes, also cool. These things and more when we return from these non-commercial break. Okay. Look at that. What are you looking at? That looks like an options board for Ethereum on Ledger X. Well, it is that. Anyway, let me continue to say hello. Bitcoin Candy, Scott, Demayan, Johnny, Scott Hill. You're in Laurel Canyon. Jesus, man. I like whatever you're doing, Johnny. It's working. You're everywhere. Get involved. Good to see you. And yeah, okay. So let's keep looking around. What's going on? What do you have? Let me take a look at the board. Ooh, big spreads. Not a lot of action. Babis, good to see you. Luis, good to see you. JD, good to see you. So if we're looking at this options board, we're not messing with futures. We're not messing with daily contracts. We're just looking. Interesting. So if I'm looking at the, looks like there's only one contract up right now, and it's the August. There's an August 27th and a December 31st. There's two contracts up, and the strike price. Ooh, that's interesting. There's a December. You could sell the. Oh, the call is dust though. You could sell the at the money call. You could sell the at the money December, the 2000, for between $400 and $1,200. $1,200. That's 60%. Woo-hoo-hoo. I don't know, man. I don't know. We'll see. That market has to get a lot more liquid before it'd be something I would get involved in. I would probably sell for August. If I could get $200, 10%. Would you sell the 4Ks against that? 10% plus. I probably would. The August 27th, I would sell the 4Ks against it. And I would sell the December. No, that's not good enough for me. However, it might make sense. It might make sense to sell the 5K and buy the 7K. Right? So if you could get between 150 and 200, and then you could buy it close to the bid. So let's say you could get two, even if you 2-to-1'd it. So I would sell the 5,000, and then I would buy 2 or 3 of the 7,000s. It's a nice little bull call spread for those of you in the options market. Anyway, Jerry, good to see you. Okay, take a look at Osmosis. I don't have the bandwidth to look at anything called Osmosis. But listen, if you like it, get it, hold it, own it. Just make sure you know what it does and why you own it. So let's talk prices real quick. The Bitcoin sold off a little bit, down 5%. Of course, it was up big, so it's down big. So I got out yesterday. I actually sold. You know what? Let's go look. I had sold. Let's go over to Bitcoin. I sold these puts. I bought them back. Wow, that's cheap. It's still cheap. The 32. I don't think this is repriced yet. Doesn't look like it has, because this 32K option, well, we're in the 33s technically. This 32K option should have bumped way up. So it might be interesting to watch. If Bitcoin drops a little bit, it might be good to take that, to sell that 32. If it gets close to 32 and this thing cooks back up, because I sold them at $2,300 and I bought them back for $320 yesterday. But there's some time that got, sucked out of those things. We only have 2 more days till expiration. So if you were a net seller, if you wanted to sell something that probably is free money-ish, then right now you would sell the 28s, right? Because it's almost free money. Anyway, just saying. So the Bitcoin, 34,219, cool, store value. Protocol layer, Ethereum, down 5%. So everything's kind of following Bitcoin. So we'll say 5% is the nominal zero. So we'll say 5% is zero. So Cardano's sold off a little bit more. It's down at $1.30. So it's down 1.8%. Polkadot sold off 8.7%. So it's down 3.7. Matic is down 9. It's strange that Matic is down that much. You wouldn't think there'd be any profit taking there, but who knows? Let's see. The VeChain down 11%. Anybody else? Rune. Rune getting kicked in the softies again. It's down like 60 cents. AR Weave is getting so close. I just need a day where Rune goes up and AR Weave goes down. Damn it. I've been trying for that swap since they were $1.50 apart. That was about the closest I could get. And they just, two ships, they won't pass each other. It's just like, anyway, 1 inch down 10%. Oof. So there's some of the kind of further out of the distance coin. Flow Chain's holding up pretty good. OGN getting punished because, you know, no one cares about it. Fetch down 10%. I'm buying. I'm out and buying Fetch today. It's one of the things I'm buying. Audius down 9. So everything's down about between 5 and 10%. Singularity. If this gets down 10, 12%, I'm back in. All right. Well, I mean, not back in. I haven't left. I kind of got screwed on the SDAO token drop. So when they got their drop ready, I went to my wallet and I logged into the website and I found out that not only does it say I'm not eligible, it took away the coins I already had. Like, how do I become negatively eligible? So I sent in a little support request and they're like, yeah, we know there's some bugs and da-da-da. Now remember, Singularity DAO is not Singularity Net. It's a spin-off project. It's not Ben Gortzel. So just be very careful. SDAO is cool. There's the airdrop, there's the token, there's this, there's that, but it's not the original project. So be careful that you're not assuming these screw-ups are all AI and da-da-da. No, they can't get their drop figured out because every time they announce their drop, everybody in the community got all angry and they had to keep switching it. You're like, ugh. So anyway, some of us lost tokens. I don't even know how that works, but we lost. I lost. So I guess 1-0. We'll see if they figure it out. Belinda, good to see you. Sebastian, good to see you. Candace, Adam, Lori. Cool. Okay. Let's keep looking. There was nothing really super interesting. Let's go over to see what's going on Pro Coin Market Cap. Let's look at the Vortex scores. Is anything at all interesting? No. Look, when the top of the list is Ethereum Classic, ain't nothing happening. Like zero. Steam. What a dumpster fire that project is. Dan Larimer. Anything Dan Larimer touches is garbage. 10. That's pretty good. Yeah, they actually took away my SDAO. They effed it all up. And so they took the coins I hadn't claimed, then said I was ineligible. So now I don't even get the claims I had. I mean, I don't even get the tokens I had, I guess, or whatever. They'll figure it out. Fetch is on Cosmos now. That's cool. I still don't think Cosmos is a game changer. It's just a little more of the same. And the problem is it's starting to get crowded in the protocol layer space. They're not all going to make it. And mostly things are going to coalesce at the top. My gut feeling is that Cosmos is not one of those top performing assets. I used to own it. It no longer makes sense to me. So I got rid of 90% of my tokens. I have a small token amount. I got a 4x in it, but I just don't believe in it anymore. And when the information changes and you don't believe in it, you exit. I think I got out pretty good. Crypto Gamer, what up? The real J. Cole. McNabb, what up? Okay, I want to show you guys something. We're going to go to, let's talk Coinbase real quick. Coinbase jumps into high yield crypto game with 4% interest on USDC. You notice that's not USDT. My guess is the days of Tether, at least in the United States, are coming close to an end, as are the days of Binance. We'll see. That's just what my gut tells me. Scorpion, good to see you. Gatomi, good to see you. And Ella Paul, what's up? Okay, let us continue. Coinbase's high yield accounts are not FDIC insured, but the company says it guarantees them. Of course it guarantees them, because if they didn't, people would be like, F you. 4% yield is much higher than regular bank accounts, but below other crypto competitors like BlockFi. Yeah, because BlockFi takes its Bitcoin and shoves it over into Grayscale, which is currently trading at a discount. So that wouldn't necessarily make sense. Coinbase announced on Tuesday that retail investors can sign up to receive 4% return on stablecoin savings. The latest example of a crypto company offering rates far outstrip the conventional banking industry's high yield savings accounts, which currently offer a pittance of around half a point or 50 basis points. According to the company, Coinbase customers can now pre-enroll for the offering, which entails purchasing the USDC, a blockchain-based equivalent of dollar, which is backed 1-to-1 by a reserve of actual dollars, unlike Tether, which is backed 2 cents on the dollar. That's actually the real number, by the way. 2 pennies of every Tether is actual dollars. The rest is all Fugazi. Okay. Even though the product is essentially the same as ordinary high-yield online savings account, Coinbase avoids the term for legal reasons. Specifically, the Coinbase USDC accounts are not backed by the FDIC. Oh, by the way, if you think FDIC, Federal Deposit Insurance, is there's any utility, guess how capitalized FDIC is? 2%. That's like 2.3, 2.4%. 2%. So as scammy as Tether is, and all the dudes have been indicted and all this kind of stuff, as scammy as it is, the FDIC that's supposed to make us feel better, they're 2% capitalized. So do the math on that if there's some kind of cascading liquidity unwind or some kind of flash attack or some kind of bank run. Ask Mark Cuban over at Iron Finance how bank runs look. Wah, wah, wah. There. Okay. I was going to play the little haha thing, but it's on the other, whatever. Doesn't matter. Coinbase, however, promises peace of mind all the same in the form of a guarantee from the company that USDC savings are secure, adding that the account offers high interest without higher risk. The upshot is that consumers can conclude that their savings will be safe to the degree they believe Coinbase is solvent and properly managed. Yeah, I kind of believe both of those things. I believe they are solvent. I believe they are properly managed when compared to ... Binance, which is run by a fucking crook. At some point, people are going to have to wise up to the fact that CZ is a piece of shit, right? It won't just be like me and Antonio saying it. Everybody's like, CZ is such a visionary. He's not a visionary. He's a fucking thief. You guys get that, right? He's a thief. He steals everyone's shit and then erases his tweets. He's a piece of shit, man. And now the world knows. Good. In offering the crypto equivalent of a high-interest account, Coinbase is competing with the likes of BlockFi, Celsius Network, and Eco. Anybody here know what Eco is? I've never even heard of it. I would say they meant Nexo, and maybe they don't even want to mention Nexo. Maybe that's the whole thing. They're just like, don't mention Nexo. It doesn't exist if we don't look at it. All of which have jumped into consumer lending, one of the hottest fields in crypto industry right now. In the case of BlockFi, the company is currently offering 8.6 on USDC. I noticed they don't talk about the 12% that you get over at Nexo. Funny. So returns on USDC, other stable coins, including those issued by Gemini and Paxos. Gemini USD. The twins. The consummate douchebags. And Paxos. Meanwhile, NerdWallet has published a list of the top 8 high-yield savings in the conventional banking world. The top are Citi and Goldman Sachs, Marcus, both of which are paying 50 basis points. Now, if the CPI, look, if they're telling you CPI, that their target is 2%, so they're okay with 2%, which, by the way, equals 50% destruction in purchasing power over 20 years. You guys realize that, right? Like, we're all agreeing to that. We're agreeing to the Fed saying 2% is cool, and we know it's higher than 2%, even if it's only a little higher, probably around 5.5% if you calculated the way they did in the 70s. 2% means in 20 years, you've lost half of your purchasing power. Half. So they're going to give you 50 basis points. So you're still getting nuked for 1.5%. And that's 1.5% nominal, their version of it, their CPI version of it. If you look at it as 5%, that number changes. Now you're losing compounded 50% in 8 years. 8 years, half your money gone. Think about that real quick. Think about that. In 8 years, half your money is gone. And you're okay with it. If you leave your money in a US bank, you are. If you leave your money in US dollars, you're cool with that. I'm not cool with that. I am not cool with that. Due to, let's see, regulatory restrictions, Coinbase's 4% offering will not be available for people in New York or Hawaii. Listen, I got to tell you this. If you live in New York at this point, get a relative or something to help you set up an account. So you got to know somebody that lives somewhere else. Just get them to help you set up an account and take over the keys. Because, man, this is no bueno. Or if you have someone that lives in another state, go get residency in that state. Right? At least get the driver's license so you can set up the account. Come on. Let's see. Inflation was accepted when wages increased in lockstep. Yeah. Remember, there's two kinds of inflation. There's the inflation when you expand an economy and you have free floating credit and cash and credit availability. And basically, it's a pull forward on future success. Then that's the good kind of inflation. That's where wages, like Jerry said, track. That's where basically hiring managers and producers and companies, manufacturers, they all see the economy growing and expanding, so they start hiring in advance or paying their employees more because they want to keep them, because they want a competitive workforce, and they start pre-ordering materials. So they're looking into the forward. They're saying, listen, if prices are going to go up because the economy is expanding, I want to get more of this stuff now. They start to hoard. That hoarding effect, in many other kind of ancillary effects, that's the good inflation. That's expansion of economy. It's inflation as a reaction to an expanding market, as a good symptom, right? Then there's the other kind of inflation where you, let's see, strip mine the market of quality assets like the Fed does. You talk a big game about inflating the economy through currency creation, and people panic and start hoarding shit, not because they think the economy is going to grow, but just because they think the currency supply is going to grow. Well, that's debasement. Debasement is not success. Debasement is stealing from the future. We talked about this last week. That's what they are doing. They are stealing from the future to finance the right now. And as long as you are a compliant rube and you're okay with the notion that we can always steal from the future because things always go up, markets never, ever go down, housing never crashes, the stock market never, ever crashes, everything is fine, everything will continue to grow. We'll have a gazillion people per square foot because things only go up. That's the same scam they used to sell Social Security. When they set up Social Security, you guys know that like the mathematicians that were there consulting, they said, this doesn't work. Like, what do you mean? Like, this doesn't work. It's basically a Ponzi scheme. This is before Ponzi schemes. Like, it can't work because you can't guarantee 7.5%. They're like, well, the economy will just keep expanding. They'll just keep being more people paying in would just equal more money, right? And then we could pay our 7.5. No, you can think of Social Security as just a big, poorly run pension fund, right? Only the inflows are only people's wages. And sometimes some like tax pull forward, all that kind of stuff. But they're not investing in anything, right? Social Security is not an investment facility. So it's just imagine it as a pension fund that the only real inflow is me and you cutting a check, with the notion that most people paying in will never receive anything on the way out. That's the only way Social Security was supposed to work, and it doesn't even work because you can't have a forever in expanding population. You see the obvious problem in that. So that wouldn't work. So basically the people they hired, the math people in the very beginning, They said from day -40, like before they had done this, they said this absolutely cannot work. 100% does not mathematically work. and these short-term perverse incentive a-hole central planners are like, doesn't matter. I'll be out of office. Most of us will be dead, and we get to eat. So that's what we're dealing with. So, God, when you start unpacking inflation, the kind of inflation of a good economy versus the kind of inflation that just printing currency units, or at least convincing people that you're printing, or remember, you can create inflation by simply decimating debt. So if you take debt, like if they look, how pissed would you be if you paid your student debt and they come and wipe out student debt? How big of an FU are you going to give the world? How about if you paid rent for the last 15, 16 months? And like in the state of California, they're just going to tell everyone, oh, everybody that didn't pay rent, it's cool. No big deal. We'll just cut a check. What do you mean? So what did I pay? Why was I paying rent? Well, you pay rent because you're a decent American and you're paying the landlords that own that property that invested in the property because you're a decent American. What about all these people that had legitimate problems? Fair play. But weren't they getting $4,000 a month from the government? Yeah. Okay. So at a certain point, where the fuck is the money? How come they couldn't pay rent? Oh, because they were buying Dogecoin like a bunch of ignorant fucking rubes. Yeah. So in GameStop and Hertz and all this other stupid fucking bullshit. And then you go, okay, so wait, so who are we bailing out? Oh, we're bailing out all the people that said, oh, you're not going to evict me for a year and a half? Fuck you, landlord. I'm not paying shit. And you can't make me. I'm going to take the free government check. I'm going to not pay rent. I'm going to buy a big fat ass fucking TV. I'm going to sit in my apartment. I'm going to send out. I'm going to order food 17 times a day. I'm going to have someone come and do my laundry. I'm going to live like a king. I'm going to live the life of Riley. And I'm fucking broke. Doesn't matter because I'm not going to pay rent because I don't have to. Ooh. And I'm going to pay for that? Why? We're going to finance that? Everyone in California is going to finance that? Oh, don't think it's just us. Every state's going to be pulling this shenanigan. And guess who's going to finance that? We are. Because anybody that makes money is going to get crushed in taxes. Oh, I own property. I'm fine. No, you're not. Because they're just going to jack property taxes and munis. Oh, well, I'll just, I'll go live somewhere. I'll go to a linear market where things are fine. No, they'll jack the property taxes up there. No one's going to escape this. And this is all just part of they are stealing from the future. Yeah. And the state pension funds are even worse. Well, not worse. They're also bad. Remember that the biggest financial problem is Social Security because it's like 100 trillion in unfunded liability. In order to make it work, you can't make it work. You cannot make Social Security work. There is no way to make it work. You guys know that, right? There is no mathematical way to make Social Security work. It's dead. It's done. It's over. Unless you print money out of thin air and fund these unfunded liabilities. Social Security is defunct. It's broken. It's fucking bankrupt. That's it. Iron Finance, Cuban's liquidated nonsensical shit show, is better capitalized than Social Security. Period. So then you go, okay, what about state pension funds, which is a legitimate problem, but that's more like a $35 to $50 trillion problem. Yes. Like 1.5 to 2 times our total debt. So you say, well, what are some of the ways so what happens if you've been paying, back to the original argument, what happens if you've been paying your student loans and they come and wipe out everyone else's student debt? Might make you say, whoa, bro. Why did I pay my debt off? What do I get? Well, A, you shouldn't get anything. You got your education. But B, they shouldn't have their debt wiped out either. Oh, it's too expensive. Then why'd you go to university? Well, because to have a chance. Bullshit. University system's jacked. Anyway, for whatever reason, it is what it is. And again, none of this stuff's going to change. Us talking about it doesn't make it change. It makes you aware of it. And then you can look around and you can say, okay, cool. No, I'm not a landlord. I know some landlords. I'm a renter. I'm renting a condo thing. So I'm a renter. because I'm not going to buy into this stupid ass market. The kind of houses I want are $3-4 million bucks. I'm not putting $3 million on a house. You're smoking crack. I'll live in the back of my Ferrari before I do that. So you have 100 trillion unfunded liability in Social Security. That's never getting paid. That thing's broken. They'll come to a point where they'll say it's over. We have 35 to 50 trillion in state pension. I think 43, JD, 43 of the 51 state pension funds are technically insolvent. Those are broken, but that's a check that has to be paid. You can't leave those pensioners hanging. So that one they'll have to cut. So that takes our national debt to, I don't know, 70, 75 trillion. And then the problem is the debt service gets so big that the U.S. can't make debt service payments. And to me, that could be bad. But of course, are they going to ever not make a debt service payment? Of course not. They'll just keep creating money and do a little balancing between the Fed, the Treasury, and the Treasury market. They'll strip mine good quality collateral, and they'll do the same kind of shenanigan game. The problem is, if at some point, if the confidence gets shaken, then that's it. That's when it all gets ugly. Crypto Gamer asks, what are your thoughts on the 16,000 BTC unlock on on July 17th? Not much. If you had made a lot of money, you would probably sell GBTC, meaning GBTC, there would be a lot of action on the ask side, not much action on the bid side. It probably collapses a little bit, which makes it more interesting for investors. Because if you essentially can get Bitcoin, even if it's proxy Bitcoin, at a 20 or 30% discount, why would you not? If you plan on holding it, you buy it at a discount through GBTC and you hold it and you win. You're getting Bitcoin for 20 grand a coin. Why would you not? So I don't think it's that big of a deal. I don't think it really, the kind of people that are buying GBTC are not buying Bitcoin directly, right? The kind of people that are exiting GBTC would be exiting because they made some profit. And they may be exiting and even if it's at a slight discount, right? So if they bought Bitcoin at 8 grand and they're selling it at a discounted 20 grand, if you kind of back the math out, so what? They still made 2.5x, 250% in 8 months? It might make sense for them to hold GBTC. So that's going to be the game theory, is how that thing's traded. So, but a lot of people are going to book that profit, right? And they may buy back into Bitcoin. But at this point, it would depend. If I had a lot of money in GBTC if I was one of the institutional investors and I had put in a bunch of Bitcoin, I got 250% locked in. Maybe I don't trust what's going to happen when people do start paying rent and all this kind of stuff. Might make sense to go to the sidelines with some cash. But then again, you look at it and you go, man, it's going to be hugely discounted. So it maybe makes sense to be one of the first sellers and then buy it as it dips when you think it gets into the deepest discount, because that's still better than buying Bitcoin directly. And anybody that has money in the equity space, in some of these Roth IRAs and stuff like that, you can still buy Bitcoin. GBTC might be a really good option. I think it's like it's between a 12 and 20% discount right now. I don't know what the real-time discount is. I'd have to look at it, but it's a good discount to Bitcoin right now. You're basically buying Bitcoin for like 20 grand. So no, I'm sorry. Not 20. You're buying it for 28, 27, 28K. So that's kind of cool. And I don't think those are the same buyers that would either be buying in the natural market, like on Coinbase or something, or buying GBTC. So I don't think it makes that much of a difference. But who knows? If people panic because they think it makes a difference, then the thinking it makes a difference makes a difference. We'll see. Nexo is back 200% or more with assets. They say they are. They are until they aren't. So who knows? Okay. So good. We got the news out of the way. Let's do something real quick. Can you share? Let me stop screen. Boop. Let me share a calculator. Bam. What are we going to do? So let's look at some ways to determine what, let's just take $100 worth of Cardano. 100. Okay. Now let's do some math. Over at Kraken, does anyone know how often you get paid? I'm guessing at Kraken, you get paid the same way you get paid on Daedalus. Correct me if I'm wrong, but I believe you get paid every 5 days, something like that, which would be 73 payments a year. Okay. So first, let me do some math. Let's go 5%. So 0.05 divided by 73. So that is our payment rate. You see that? Point, not 68493. We'll go that deep. Okay. Now, how would we determine, what does this mean? That would be each week. And this is, by the way, for those of you that are staked over at Daedalus, which you should be because it's very safe and you have control over your assets. For Cardano, I'm going to write that because some of you may want to keep that in the back of your mind. By the way, throw a brother a like because people might benefit from this. Okay. For those of you that are curious, the ADA 5-day payment rate, not 68493. Boom, add banner. Boop. That is the 5-day payment rate for Cardano right now, this second. Okay, and so you can take your tokens and you can go, okay, cool. So let's multiply this times, let's say I have 100 Cardano. Okay, so on the first payment, that's what I get. I get 0.68 Cardano. Okay. And what you can do, so that's what you would get off of 100 Cardano. Okay. Now, how do you do the math and extrapolate? What do I get day for day? So there's another trick to that. And so you're going to go original amount, okay, times 1.006849. This would be easier if I could use the little keyboard, but I'm using the calculator. Okay, so what does that equal? Boom, week 1. That's my total. And what this little math kind of jog does is it gets us what our total is every 5 days. So then you can just keep pressing the equal sign and you do it 72 more times, and that gets you what you got in a year at their current compounded interest rate of, and we used 5%. It's actually higher than that. It's actually closer to 7 and change percent, but I'm just using this as what they say would be the low end. Okay. So 72, so 73, 2, 1, 60, 9, 8, 7, 6, 5, 4, 3, 2, 1, 50, 8, 7, 6, 5, 4, 3, 2, 1, 40. You see what I'm doing? 9, 8, 7, 6, 5, 4, 3, 2, 1, 30, 9, 8, 7, 5, 4, 3, 2, 1, 20, 9, 8, 7, 5, 4, 3, 2, 1, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And then the number 73, 4 plus 7. That is, I think we have 10 more. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you get a little bit over, right? So you get about 0.2 more. Does that make sense? Let me see. Hello, rely on the like. YouTube. Yeah, YouTube loves the like button, man. YouTube lives off that like button. Okay, so what is this basically telling us? So you get more than 5%. You guys understand compounded interest, right? If you got 5% a year, you get 5. So here you get 5.1. Okay, that sounds cool, right? Great. But what does that look like when you go to daily interest? Well, we have our 100 tokens, okay? And we know we get 5. We got to actually real quick. We've got to take that 5%, 0.05. We now divide it by 365. Okay. So what is that? Not 1369.8. Okay. So 1369.8. Okay. So now what we do, and this is, I guess I'll do another, let me do another banner for you guys. This one is going to be ADA daily payment rate. I know this is boring for many of you, but you need to see the difference just so that you understand what we're talking about. Bop, 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 1369698. Okay, 6986 is really 699, but we're going to call it 698. Add the banner. Okay, so the daily payment rates. This is if you went from Kraken, as an example, or from Daedalus over to Nexo. Why? Because they're like, well, what's the, okay. So we know that's payment rate. So we go, okay, 100 tokens times, you got to put a 1 point, bop, 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 13698. And there's actually a 6 on the end of it. We're going to add the 6. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 9, 30. We're just through January. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. Let's call it a leap year. 29. We got that extra day in there. We're dope. And did I do 30? And then January there's 31. So boom. So now we're 2 months in. Okay. You can already tell looking at this that it's going to be better. It's the same percentage rate, but it's compounded interest. Now let me also add the asterisk. You actually get paid more at Nexo right now. You're getting paid between 6%. If you live outside the United States, you can get paid 8% because you can take the Nexo token, but it's not quite the same. So let's just say you can get paid 6% if you had Nexo tokens, but you'd have to maintain 10% to be platinum. There's these little caveats, right? But apples to apples directly compared with Kraken, this is what you're getting. So we're 2. I wish there was a better way to do this where I didn't have to wear out my mouse. Anyway, okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 9, 30. Okay, so now we're at the end of March. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 9, 30. I probably should have done all this in advance, right? April, March, April. Yep, 30 days. Let's go to May. 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, you know what? I'm going to put some background music. That way you guys don't get miserable while I'm counting. May. Let's go. June. Equal. Oh, we're back. Whew. Okay, we got June. Okay, so we're not even July yet. Let's see what we get. It's like thinking. I'm wearing this mouse out. Come on, buddy. Breathe. Don't go into the light. Okay. Here we go. We got July knocked out. Let's get into August. Let's see what we got. Come on, baby. Come on. I know, right? Well, at some point the number, what? We've got it. Okay, so we just finished September, October. Anyway, you see where this is going. It turns out to be like 15 to 20% more by going with daily interest, daily compounded interest, because you get 5 times the compounded interest. Does that make sense? You get 5 times the compounded interest that you would have been getting because you're getting daily versus, okay, you get it. So you get a lot more. Okay, so long story short, let's go away from this and let's go to, this is before we go into our cognitive bias talking. How do we get this guy to show up? There we go. There we go. Sunk cost fallacy. What does that prove to us? All it does is it proves to us that you would rather get paid as many tight intervals to get expanded compounded interest effects, right? You want more multiplication. You want more instances of interest. No matter what the interest rate is, you'd rather have it divided and paid, because those little incremental payments add up to bigger compound interest. Okay, I hope everybody gets that. That was a fun math experiment, but I'm going to absolutely blow up my computer if I press it another 180 times. So anyway, it ends up being a lot better, right? Then you're 5%. Like I say, if you got a 5% payout. Now, would I leave Daedalus for Kraken or Nexo? Absolutely not. Now, would I maybe go over there if I was going to originate a loan, like a home loan or something? Well, no. Because even though I hate Celsius is about to list Cardano, and you can borrow 25% of your assets for 1 point. Meaning if you take $100,000 worth of Cardano over there, you could borrow $25,000 for 1%. I don't care who your mortgage guy is. That's the best deal going. So just keep that in the back of your mind. It's kind of cool, right? So if you're one of these people that pulled $1 million or whatever, might make sense to take that 25% loan and pay 1% on it. So for like a down payment on a house or something like that, you could park some Cardano over there. You grab your down payment, make it, and then that's still cheaper than the other way that would work. Okay, cool. You could then take your staking rewards and use that to pay off the loan, for example. Anyway, there's all sorts of ways you could do that, right? Great. Okay, let's talk a little bit about sunk cost fallacy. So let me get our better banner. We get a better banner. We are over here. Okay, so we're going to try to get through at least 2 of these today. Sunk cost fallacy, which is referred to as irrational escalation, and loss aversion. Sunk cost fallacy happens all the time, especially people that get in. It's really bad in certain circles where they keep talking each other up. One guy it doesn't matter. I would just say Link, XRP community, many of these communities where they just refuse to look at the outside world and they just live inside their own little bubbly echo chamber. And like when people are making statements like, when XRP hits 100, do you think most people will sell or will they hold on to 500? Whoa. I don't even know where to get. I don't even know where to start to unpack that. All right. Sunk cost fallacy, irrational escalation. This is a phenomenon where people justify increased investment in a decision based on the cumulative prior investment. Despite any new evidence, this is the key, despite any new evidence suggesting that a better option exists, the better option likely involves abandoning the previous investment or, maybe trimming down. If you've ever heard the phrase throwing good money after bad or throwing good money after bad money. Oh, yes. Let me tell you why, real quick, for those of you that were like, oh, Craig Wright won the lawsuit. The dudes didn't even show up to defend it. They realized that it would cost more money to hire the lawyers to go and defend it. And they basically just said, who cares? Craig Wright's he's an idiot and he's not a dummy. he's an idiot. I think he may actually believe he's Adam Back. I mean, Satoshi Nakamoto. Did I say that? So yeah, I wouldn't take too much from that. Okay. Back to sunk cost fallacy, throwing good money after bad. Example, you spend $450,000 on a new house only to realize with new information that you're going to have to spend another $600,000 to get it finished out. Right? So if you have an option to buy an equivalent house for less than $600,000, it would be the sunk cost fallacy not to abandon this house and move on. Does that make sense? So sometimes we get emotionally tied to having laid a dollar into anything. Once we've invested, it's a strike on our own ego to have to admit that something might be flawed about the project, or something might have changed, or maybe there was some underlying bias when we bought in that was flawed. For one of many reasons, when we invest money in things, we become emotionally attached to them. And selling them, rebalancing them, or just admitting that they're fails, that's a shot against our ego. And that's a pill that some people won't swallow. Okay, there are many examples of this in basic investing. Just because something is at a discount doesn't mean it's a good deal. Mostly things are on sale because they either didn't sell or new information has surfaced that casts doubt as to the perceived value. Remember, the prices are always right. The market is always right, right? And say it with me. The market is always right. Does it mean the market is intelligent? No. Does it mean the market is got a high investor IQ? Absolutely not. But the market is right. What they say is the price is the price. Your job is to determine what the value is and get in or get out before all of the other compliant rubes do it. You don't have to beat the bear. You just have to beat the fat kid. Right? So one more time, say it with me. The prices are always right. The market is always right. The only thing we're doing is determining value. So we may not agree with why people are buying or selling. We may believe the information hasn't yet or efficiently propagated to the entire market, but the price is always right where it should be based on the available information and people's perception of value. And this is the thing. This is where you win, by doing research, by understanding kind of your fundamental understanding of the crypto space and what these assets do and what the particular sector in the crypto space of the assets you own. It doesn't even have to be crypto, just in general. The more you know about a sector, the more you know about the climate and the environment, the more likely you will have a better idea of what the value for that asset is. And that's how you win. So this is not the internet boom or bust of the 90s where only fat, rich white guys were able to play in the pre-IPO markets, then dump their garbage on the public markets between the hours of 9 a.m. and 4 p.m., all the while knowing that they knew way more than us and basically laughing all the way to the bank. The crypto revolution is ours. The fat, rich white guys missed out on this one and they're pissed. There's a few fat, rich white guys, right? Like, you know who they are, Novograts, that were here early enough. And they get to participate. But the average fat, rich white guy missed this one. It missed it big. So they're seething and angry and they want to redo. They don't like the idea. They also don't like the idea of these kind of decentralizing the investment space. They don't like everybody having their hand in investments. And I'm on both sides of the fence. I think it's great that everyone can invest. I just wish they were actually investing their own money instead of money that's being printed and being stolen from the future and showered on everyone. Because now you get mob rule and mass hysteria, and it's not good. What we got is not good right now. And the evidence is that bad, broken, dumb companies are getting bailed out, and all of those guys are laughing in our faces. They're like, look at these idiots. The Reddit mafia thinks they're punishing somebody. They're not punishing anyone. They're making bad businesses survive. They're no different than the government. What's the difference if a bunch of idiots buy into stupid stocks that should be bankrupt and prop them up so that other people will lose all their money versus the government creating all these zombie companies? Shale oil, that whole fucking industry shouldn't even exist. It does because they keep getting them money. They keep fueling them with zombie money. So these are zombie companies that shouldn't exist. that can't make money. Tesla is a zombie company that wouldn't exist without government stipends. Would not exist. They'd have some IP, but it's not a company that is solvent without free government money. If they didn't have that, they wouldn't exist. Period. Ford wouldn't exist. Period. Their assets would go to another company that could better manage those assets. We need bad companies to fail. If bad companies can't fail, the whole fucking system fails. And you get what you get now. These meme bullshit stocks pushed by the Reddit mafia. Yeah, Ford. Now you look at a company, you go, oh, they're about to go bankrupt. We need to buy into it. What? What kind of counterintuitive fucking bullshit is this? But it's true. It's weirdly true. Because a bunch of ignorant rubes will get behind it because they think, oh, it doesn't matter what the company is, what it does, what it didn't do, how poorly it was managed, how they stole from everyone. None of that matters. There's some guys shorting it. Let's go the other way. Why? Because on the other side, you have guys cheating, shorting more than the total available supply, shorting 126% of a company. How's that even possible? Because they cheat. So you have idiots on one side, cheaters on the other side, bad business managers in the middle that can't run a business. And they're all getting different. Some of them are getting good. Some are getting blown up. And they're kind of rotating. It's like musical chairs of assholes. And that's what's going on. And that's the market we live in. And the reality is none of us can change that. But as long as you understand the environment, remember, the market can behave irrationally a lot longer than you can remain solvent. So don't go, this is stupid, it has to change. It won't change. It won't change, not because we don't like it. It will change iteratively as people go bankrupt, as they get blown up, as the free money stops. Then you say, wait a minute, what if the free money never stops? Well, maybe the free money never does stop. Maybe this is into perpetuity. Maybe we invest in dumb, bullshit, bankrupt fucking companies with poor managers because the free money never, ever stops. What up? That's my producer. So, you have to imagine we could be in a world where this is the new normal. Abnormal is the new normal. Right? In an insane asylum, once the insane take over, the people that thought they were sane, they become the minority. So the markets can behave irrationally a lot longer than you can remain solvent. So don't go against the trend. Just try to look where the flock is going. Just outsmart the flock. That's all you got to do. And remember, the investor IQ right now is lower than it's ever been. Now, does some of that end when people have to start paying rent again? Maybe people never pay rent again. Maybe we really have reached universal basic income. Maybe that's where that's what this is. And maybe MMT, modern monetary theory, where you just print, and there's no such thing as a sovereign debt default. And so who cares? Maybe. None of us know what kind of financial machinations are in the future, which is why Bitcoin, right? This is why you would own Bitcoin, because you know that things are so effed up that you want some kind of store of value that is outside that system of perpetual bullshit. That's why Bitcoin. I continue. So the crypto revolution is ours. The fat rich white guys missed this one and they're pissed off. They're seething and angry and want to redo. They'll use the press, the media, advertising, their friends in law enforcement, the same crooks that let all those assholes get off without a single indictment when they brought the entire planet to a few hours from financial apocalypse in 2009, really 7, 8, and 9. The crypto markets are different in that everyone on the planet can participate, and this is powerful. This is world changing. And I would also add, this is also kind of dangerous. We've seen in the stock market what happens when you have mass participation. I'm not going to go into, you get it. You guys all get it. You know what's going on when you go out to a restaurant and people are on their phone trading Dogecoin and stupid shit on Robinhood. And they don't even realize they don't own it. Matter of fact, they don't even know what stocks are. They're like, what is it? I don't know. It's you put money in and more money comes out. No, dummy. So What you believe to be true might not only affect your own buying, selling, trading decisions. Okay. It's fair to say that people, the general public, are rarely informed of all the information. But it's emotion, not facts, that move markets. Sure, some pieces of news could be the tiny snowball that starts an avalanche for market sell-off or quick bull run. In fact, people mostly cling to any little tidbit of news and run with it. If enough people react, you get irrational exuberance, or its evil twin, full-on panic. I would say shitting in your pants panic. Markets, especially the crypto markets, are known to behave irrationally. Technical analysis, the study of charts and chart patterns that signal trading behavior, don't work in the crypto space because no one trades off of charts. Now, listen, even if the charts were nonsense, which they kind of are right now, if everybody was trading off charts, or at least more than half, then the charts would be significant, because it's the cart pulling the horse, right? If enough people believe in the charts, it becomes a self-fulfilling prophecy, and then people start following the charts because they follow the charts. Now, do the charts have anything to do forward-looking? Not really. They just tell us where we've been. But humans do behave in very patternistic ways. Humans are very simple, and we plot out on a chart pretty consistently. It turns out we're not really all of those unique, interesting snowflakes that Chuck Palahniuk would have liked to believe we are in Fight Club. So the crypto market is accessible to everyone. And if you own or can get to a computer or smartphone, you can participate. This availability of the masses means that inexperienced investors who don't follow the established rules of civilized trading behave unpredictably. I want to caveat this. I wrote this about a year and a half ago, well before the GameStop bullshit began. And do you guys think that it's coincidental that this happened during COVID? You think that's an accident? Come on. They're untamed and easily stirred to behave in ways that do not make sense to more educated investors. That's about the crypto IQ down. Well, not just crypto IQ, investment IQ is at a staggering low. The thing I appreciate most about the crypto space is that the majority of the money, at least in the beginning, is not institutional in nature. That's starting to change. The crypto revolution was started with a few guys banging around on their PCs. It's grown and sucked up software professionals, developers, millennials, lawyers, mostly below the age of 45. The typical crypto investor has a general mistrust of banks and the old school financial wisdom. Call that the legacy financial system. We neither need nor trust criminal bankers, financial planners, politicians, central planners, bankers, federal, central bankers, even though we don't have a central bank in the United States. And their days, like the dinosaurs, as the asteroids entered the Earth's atmosphere so many millions of years ago, their days are numbered. You're seeing the legacy financial system. By the way, NYDIG now said they have 600 plus banks that are going to use their wallet software and circumvent the crypto exchanges to buy Bitcoin. That's turning into a bigger and a bigger deal. It's becoming more. I wasn't sure if the NYDIG deal was all that important. It's starting to look like it may have some legs. I'm curious. I don't know if your average retail banking client wants to own Bitcoin through some ancillary of their bank, through NYDIG. NYDIG will be the ones doing, and I forget who the platform is they're using for custody. It was in an article I was reading earlier. But the point is, you wouldn't have to go to Coinbase to buy Bitcoin. Now, the other side of it is, do you want banks custodying your crypto? I would say absolutely not. Right? I'd rather let Justin's son custody my crypto. And that's saying a lot. I'd rather let Brad Garlic. Okay, no, I can't go that far. Not garlic mouth, but anyone else in crypto. So remember, the price is always right. Don't get mad at prices and don't get mad at human behavior. Just be an observer. Instead, try to understand the why. If things in the market are going against you, they're behaving in a way for a reason or a variety of reasons. Try to put the pieces together as quickly as possible so that you're building a library of experiences. I think that should be you. So that you build library experiences that can be used to take advantage of the next pop or drop, bull or bear rush, FOMO or FUD, or whatever comes your way. The price is the price, right? Why are people why are people selling XLM when they know with 100% certainty that the coin will be listed by Coinbase that has statistically had a huge price appreciative effect on other tokens that are listed? Where's the logic in that? Is it manipulation, or have people lost the stomach, or is it that Bitcoin is getting punished and the altcoins, alternative assets, are getting dragged down with it, giving your tokens the appearance of a sell-off when actually it's just the most that most things are priced in terms of Bitcoin? These are the kinds. Ask yourself all of these questions. I don't give a crap about XLM. What I'm saying is, as a proxy, when you see behavior that you think doesn't make sense, you need to step back and you need to look at the surroundings, and there will be some information at some point. And if you don't have information, don't act. Just wait until you have information. Mostly the best move to make is no move. Just wait until you've developed the information to make a new thesis or a trading or an investment decision, right? So let's get back to sunk cost fallacy. Okay. So simply chasing a coin, dollar cost averaging in because it's cheaper doesn't always work. Find out why the coin has dropped, right? Let's say you own a position and it goes down, I'm going to buy more. Well, wait, before you just buy more, make sure the story hasn't changed. Make sure there's not some big piece of information that you're not correctly weighting. None of these assets can be viewed in a vacuum. Okay. If you see the entire market S the bed and your coin is swept up into madness and you still believe based on your research that the coin represents real value, then you should carefully and slowly add to your position. This is rebalancing. We talk about it a lot. Take whatever money you're prepared to light on fire and break it into several chunks and buy over the next 2 days or 2 weeks, right? What I do is I break up my DCA funds for a particular coin and I make 3 to 4 purchases over the next 48 hours. I use 2 days. If I'm going to rebalance, I rebalance over a couple of days. That's me. You could take longer, shorter, whatever. I feel like these drops in the market seem to be 2 to 3 day drops. And if I dollar cost average over about 2 days, I feel like I get the best aggregate low price. Anyway, this way I can average down if the market continues to, fold over. Bend at the knee, so to speak. If you see the market rising, but your coin isn't following, well, that might be trouble. When Bitcoin wins, we all win. When it falls, we all fall. When Bitcoin wins and your coins are stuck in the mud, it's time to investigate and make sure that your underlying research is sound. Your investment thesis needs to be valid all the time. The minute it's not, it's time to cut your losses, go the other way, or lower your position, lower your exposure, right? And this is from a while ago. And just so that you know, this was written about a year and a half ago. So there are a few coins that I add on dips. I have changed this. Why? Because the information changed. I used to add Stellar Lumens, XRP, BTC, ADA, and EOS. What did I notice? What did I write? I think, on EOS. God, I hope they figure out governance. They didn't. EOS did not figure out governance. I got out of EOS. I got out of XRP because jail. I got out of Lumens because technology. And BTC, obviously, and Cardano are still good. But I actually have started adding EOS. You say, why? Dan Larimer's gone, which I think is a good thing. But they still have problems with governance. Yep. Terrible problems. Worst governance. But you know what they got? Billions of dollars. And they're starting an exchange. And guess who's getting behind them? Half-ass wannabe Tony Stark, Novogratz. They're starting an EOS based exchange. My guess is he's going to push it to all of his compliant rube asshole friends. And pretty soon, I promise you this. I can't promise you. I'm going to guess. Real Vision is going to start having videos about EOS. Is this the next Ethereum? Oh, I think everybody's missing it. Oh, no, wait, that's Tika Tuari. He'll probably do it too. And then you're going to see in real time what I'm talking about. How these same 6 or 7 assholes talk to each other and they try to talk their book. Raoul Pal will be talking about EOS. You bet, just bet on it. Right? And then I'll be talking, is this the next one? Right. We'll see. I'm also careful to put half of my money on the table, to pull half of my money off the table when any of these coins pull a double. So you guys, when you're trading, you need to be making bigger scoops off of the profit. If you're investing, you're in it for the long term. So, and let me caveat this. This is not financial advice, but I think people are wise to buy some XLM. This is before the Coinbase listing, and then sell into the hype and 1 to 2 week run up that will invariably occur because of it. Should be good for 3 to 5x easy. I don't think it ended up being all that good. I think at the peak, it was like a 3x. But remember, this is back a couple of years when XLM was, so I need to tighten this up a little bit, but I don't think the run was as much as this was about a year and a half ago, coming towards the end of the Coinbase effect. Matter of fact, when any new coin gains new exchange listings, Coinbase, Binance, Bittrex, etc., they always have an early appreciative effect on the coin. That coin, based on what I believe, should eventually pass the $10 to $20 mark. See, this is when I was really bullish on Lumens because I thought they're doing something that XRP wasn't, because they went the nonprofit route. But I actually exited the position. My first exit was at $1. No, 92 cents. It was 92 cents. So I did really good on that, but it never got anywhere near the range where I thought it was going to get. And how did I establish that range? Well, I looked at what XRP did with no real utility and no real adoption and zero volume. And I thought, well, XLM is like the nicer version with a nicer team. And they have a footprint kind of in Europe and Asia and India. So anyway, we all miss it sometimes. On the other side of it, I bought XLM for less than 1/2 of 1 penny. So I got 180x on it. So while I was wrong, I still got 180x on it, 18,000%. And this doesn't mean that I'm a genius. This is because the crypto space is that. It's a massively expanding space where you can be wrong, right? Do you want to be rich or do you want to be right? I'll rather be wrong and rich. So this is another method, and we're getting out of directly the sunk cost fallacy, but these are some things you can do to kind of avoid that kind of system. Profit bounce cost averaging. This is a technique, I'm sure it's called something else by sophisticated types, where I take profit from a position that has gone up much faster than the average price appreciation of the market. You can use the 200-day moving average if you want. It's a really easy, it's kind of like a good litmus, or you can look at the 200 and the 50 compared. And then basically when it goes up too fast, I take a big chunk of the profit off the table, and then I slowly reinvest it over time. So imagine a coin that's only been slowly appreciating from $1 to $1.10. A few months later, it's $1.20, $1.30, $1.40. Then it goes hyper on some new coin comes out or whatever, or some news comes out. It rockets to $3.50. Well, I'm pulling half of my money out, right? That locks in well over 100% in profit. And then what I do, let me continue. But the rub is, if I still like that coin and I don't want to completely exit, and I watch that thing run up another 500% or 10,000, percent, as is the case in the crypto market. So I'd rather reposition and do some dollar cost averaging as the coin settles down. So then I wait for the market to calm down a bit and approach the averages. Prices always return to the mean, to the average. There's always mean reversion. When you hear, mean reversion, that's what they're talking about. Prices will skyrocket up, but you can look at the chart, you can put your finger in the middle of it, and more often than not, prices revert to the mean. They revert to the average. The problem is you don't know how high it'll go where you're supposed to draw your finger, right? So you're gambling a little bit. Mostly when you see a coin go up and up and up and it starts to drop, and then it creates this psychological barrier where it can't quite break out. For the meantime, you're probably looking at a mean reversion. We saw that with Bitcoin when Bitcoin was 65K and then it went to 50 and went bang, bang, and it couldn't get back above 50. We said, okay, halfway is about 30K. I think they said 29 and change was like the halfway. Well, look what it got to. It almost got there, right? Because people believe it. If you buy into the myth, well, everybody seems to believe in mean reversion. So this makes sense. Things rocket up, then fall back down, and there's a lot of oscillation between up, down, up, and down. But you can always, usually, there's no absolutes, but you can usually draw a line through the middle because prices tend to return to the averages. So don't panic if you sold out a position and it continues to run. No one ever got poor taking a profit. You simply wait for prices to return towards the average, and you can buy back in. I think that says buy back end. That's not what it meant. And this is what I do with profiting coins that I believe if I think they've run too far too fast, I'm out, and I'm just going to wait for some kind of mean reversion. You might say that the technique of this kind of profit bounce cost averaging is the opposite of sunk cost fallacy. Instead of throwing good money after bad, I'm throwing profits after an asset that may be mean reverting or after a slight retracement in the market. I'm not recommending that anyone else attempt to do this because there's a lot of timing involved and you have to stare at charts and stuff like that. But it is a good way to play with your profit, basically with the house's money. If the coin continues to appreciate and then the value keeps going up, you hold your profit in cash. You could hold it like on Nexo at 12%. So you're making money on your money while you're waiting to get back in the position. And if it just completely craters, then you've got your original investment out and you're still playing with the house's money. So you're still happy. So, again, tuck that concept in the back of your mind. You don't have to only rebalance when something goes down. Sometimes something goes up too fast and it doesn't make sense. And you go, I feel like at some point this has got to come back down because this doesn't make sense. Now, what makes sense and what doesn't make sense, that too changes over time because the world is a different place. Okay, we only got through one today. I'm going to let you guys go. We will attack loss aversion tomorrow. Anyway, kind of fun, sunk cost fallacy. Don't get punished. Don't throw good money after bad. Don't get mad at the price. Don't get mad at the market. Simply just try to grasp what's going on. And even if it's screwed up and stupid and doesn't make sense, it doesn't matter. It is the way it is. And real quick, FTX, something seems scammy about that guy. I don't know what it is. I can't put my finger on it. I've been following Sam Friedman fried chicken fried Bankman for a while, and something irks me. It's irksome. I can't put my finger on it. It's kind of like the way I felt about CZ about a year and a half ago. I just started going, something's not right, man. Something's not, it doesn't pass the smell test. Like if you met him at a party, I feel like you'd go, this guy's kind of a snake, man. He's, FTX looks a lot like, to me, kind of like crypto.com. They're making all these partnerships. They're making all these agreements. Something doesn't feel right. I've never had that feeling about Coinbase. I've never had that feeling about Kraken. Never had that feeling about Bittrex. I have had that feeling about Bitrue. You know what? I've never had that feeling about KuCoin. But FTX and crypto.com, there's something scammy there, and I can't put my finger on it. So my advice would be, cool that Tom Brady's pumping Bitcoin. That's awesome, I guess. He put laser eyes on his profile. But he didn't invest. FTX paid him many millions of dollars in equity. So, I don't know, man. I'm not a fan. And my guess is in a year or two, we will get information that will confirm that not all is right. I hope everything's fine, and I'm just kind of looking too deep into this. But my gut tells me something about that guy and FTX is incredibly shisty. I can't figure out what it is yet. I don't have any kids, but I can assure you I would not let him drive my kids to school. So take of that what you will. By the way, basically Binance is getting shut down in every country that it operates. So good news for Binance. All right. We'll see you next time. Stay out of trouble. Maybe I'll try to get Jerry to come in with us tomorrow. What do you think, Jerry? Come play with us on Thursday. So, okay. We will see you soon. Stay out of trouble. Stay in school. And don't do anything my poor insolvent drunk, strung out on meth, high as a kite grandmother wouldn't do. It's good news, everyone. All she is really, really drunk. That's all.
Hey, this is the Profit with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit? Hey, hey. We talking condos and nice clothes and dropping Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket. By any means I rock. This is the Profit with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Profit. Hey, hey, you talking to the Profit. Hey, hey, you talking to the Profit.
It's all fake news. It's phony stuff.